Joining us now is John Embry, Chief Investment Strategist at Sprott Asset Management. John, we've been doing this for so many years. We've been friends even longer than we've been doing things on the radio. But yeah, I remember the roundtables in 2002, 3, and here we are, fast forward to 2016. And of course, back then we had silver in the fours and gold was around $300. But we've been through some amazing times in the last 14 years. You know, we've seen gold surge to 1920, silver to $50, and then we had the horrific mid-cycle correction or bear market that was just like Chinese water torture. And now we've entered the new bull market here in the new bull market phase. So from a big picture perspective, how does it feel after 5 years of torture, and where do we go from here?
Well, I think people don't understand one basic fact. And I mean, the bear market, if that's what you want to call it, of the last 4.5, 5 years in silver and gold was manufactured by the powers that be. I mean, this occurred at a time when money was being created at record levels, and the debt in the system has expanded by close to 50% since 2008. There was no reason on earth for the precious metals to be down other than a very, very orchestrated attack by the central banks and the bullion banks and the usual suspects.
What do you see going forward? Because, you and I have been around this for so long, John, but at the start of bull markets, we'll urge people. King World News does that. It tells people, look, we're starting this bull market. Pay attention to what Jesse Livermore has to say. Don't lose your positions, but people get conditioned by the past 5 years, by the torture of that. Are you seeing people lose their positions in spite of the fact that you're asking them to hang on?
That is a wonderful question, Eric, and you've been doing a wonderful job in your site trying to keep people informed and in the picture, because people just get discouraged. And it's really funny. I was having a long chat with a close friend of mine who shares my point of view at this point. And he says he talks to so many people who are in our camp, and they basically now they see what the position of the commercials is, and they're scared to death, and they're out of their stocks, and they're selling their positions because they think silver and gold are both going to be attacked. But as I mentioned to you earlier, the commercials shorted 25,000 contracts on Thursday, and they got absolutely stuffed today. So I'm beginning to wonder whether or not we're facing finally a commercial signal failure when the bullion banks at all get overrun by people that realize that this stuff is really cheap.
John, while you're addressing that, I just want to talk to the global listeners for a minute myself. You have to be very careful to just use the COT report, because it can be a fairly good timing tool on the way down at bottoms, and it's not perfect at that. But on the way up, it's very difficult to look at a market. And I know we've had a lot of people calling tops, and these were at much, much, much lower prices on both gold and silver. And the problem with calling those tops is that the commercial commitment of traders, it's not going to give you those answers that easy. I remember one time when I was speaking with Ted Butler, and the commercials were 100% short at that time on silver, and the price was $6. What happened was the price proceeded to surge 40% higher to $8.40 before then collapsing back down, so those commercials could try to get healthy on those positions again. So it's not a timing tool on the way up. I think for the global listeners, I want to say to them, if you're trading and you get to a point where you think that's enough money and you want to book the profits, that's great. But if you're in stuff for the long term, be very careful about losing those positions, because I know when the COT got rough, some people sold Agnico Eagle at $33 US. That stock is $47 today. So if you lost your position in that stock, it's almost 40% higher, and you're wondering, how am I going to get back into this? And so you were too tricky, you lost your position. And that's what you don't want to do in bull markets. You just have to be right, you have to sit tight, and you have to stick with the high quality shares. Now, there are going to be pullbacks. Could there be a 10, 15, 20, 25% pullback in the shares? Yes, that can happen. It would just set up the final leg, because that would be the last great buying opportunity of what is going to end in a mania. So you have to be very careful about losing your positions here.
Well, no, your point's really well taken, and it was well said. I mean, what's happened here is you've had the Huey Gold Index, which is a very representative index of the gold shares. And I mean, it's risen 135% since January the 19th with minor corrections. I mean, the corrections, you barely even noticed them. This is unusual. And I think it bespeaks two things. I think it bespeaks first how cheap gold and silver bullion were. But more importantly, I had never in my career, and I've been at this a long time, seen the stocks cheaper in relation to the bullion, even when the bullion was beaten down. So this was a fantastic opportunity. And I'd really strongly encourage people, I don't know if I go piling in right this minute, but I would certainly hold my positions. And on any weakness of any size, I would be getting in, totally going all in, because this is just in its early stages. And one of the reasons I say this, Eric, is the fact that very few people are excited. I could talk to all sorts of people who aren't really knowledgeable on the subject. They don't even have a clue what I'm talking about. I was having dinner with some friends the other night who were astute guys, and I asked them, what do you think the gold index, share index is up this year? One guy, I don't know, is it up much or was it up 60? Somebody said, maybe, I heard it was doing well. Is it up 60%? No, it was up over 100. Nobody's figured it out yet. This is so early in the game that the people that are there are sort of the leading edge.
For the people listening around the world, it's very important what John just said there. And what Jesse Livermore was saying is that his experience early on matched the vast majority of people that he would run into, which is in bull markets. And early in his career, he wouldn't make much of any money or any money at all. And it wasn't until he mastered the fact that you need to get in early and hang on that he made those spectacular gains that made him such a legend. So try to hang on to your positions. Yes, there are going to be pullbacks. Yes, some of them are going to be designed to shake you out. Bull markets throw riders off. That's what they do. So they want to shake out the weak hands, get them out of the market before they take them higher. The bull markets, as Richard Russell always said, are designed to take as few riders with them as possible. And Richard Russell said there's very few human beings that have the stomach to hang on for the entire ride in a bull market. So John and I are having a little bit of a back and forth here today just to try to get everybody to understand that, yes, the correction or the pullback can start at any time. Don't worry about that. Just if you're in your long-term positions, they're not trading positions, but these are long-term positions you're going to hold and they're high-quality shares, just sit in them. Stomach those pullbacks if you want to add when the pullbacks happen 10, 15, 20% on the stock. The problem is in a lot of these bull market moves, they don't let you in. And there's a lot of money on the sidelines waiting to get in. And because there's a lot of money waiting to get in, the bull market won't let those people in. So the pullbacks are real short, they're real shallow, and then it just goes higher and higher and higher. And that was sort of what Bill Fleckenstein was saying on one of the Q&As that we had published on the site, is that he had the feeling that the major pullback crowd was very large and that the higher and higher and higher melt-up crowd was very small.
I couldn't agree with that comment more. And it was sort of confirmed with conversations I've been having in the last 48 hours. I know a lot of guys who really love this area, and they're not in now. They basically said, they didn't like the commercial short positions, and the stocks have run too far, et cetera, and they're out. And they're missing like some spectacular action right now. But this is just jacks for openers, because basically I think gold and silver are going to trade at multiples of the current prices. And the leverage in the shares in that event it's going to be astounding. We haven't scratched the surface yet. And the fact that nobody seems too interested makes me even more optimistic.
That's a lot of experience coming out of John. You've been doing this over half a century, John.
That is correct.
And for the listeners around the world, you look at the HUI on Friday, it was up almost 16 points. So it has a 7% move. And as John said, a lot of people are going, boy, I can't be in this. It's run too far, too fast. Step back for a minute. Take a look at the big picture. The Huey, when it topped in 2011, was above 600, probably 620, 630, somewhere in that range. And even with the gains we've seen, and we've seen spectacular gains, there's no doubt about that since the beginning of the year, the HUI today trades at 230 and change. So it peaked at 630, and it's 230 and change right now. So it would take 400 points just to get back to the old highs, right, John?
That's an excellent point, because I was just looking at the stocks that make up the Huey index, and I was seeing how much they'd rallied off the bottom on January the 19th, and how much they're off their all-time highs. We haven't even made a dent yet. We have just sort of went from the cheapest period in history for gold and silver stocks, and we're just starting to sort of semi-normalize, but this has got so far to run, and before this is over, it's a joke.
John, I know that you're incredibly wealthy.
Well, don't tell everybody that. They may be sending people after me.
But your wealth in your life that you've accumulated has been through getting into bull markets early and hanging on.
That is correct.
Can you talk to people about how you were able to do that? You're one of the few human beings that can do it. How do you weather those big shakeouts? How do you stay in your positions? Talk to them about how to do that.
Well, the key is to buy things at the right time. Like if you buy things when they're cheap, and basically not a lot of people are interested in them, but you've been able to analyze the fact that there is really extreme value here, then you can withstand the sort of the fluctuations as they move up because you've got a great entry price. And, basically in that situation, you don't have to get the maximum gain. Most people are, they're getting in late and they get rolled over at the top. But if you get in early, you've got incredible flexibility. And as Richard Russell, who was, interestingly enough, one of my gurus when I was young, he gave wonderful advice. I had just loved everything Richard Russell ever said.
And John, I'm just looking at a chart here, the HUI. We're at 233 currently. If we went to 250 or so and then had a pullback to 200, that would be about a 20% correction. You're saying on those dips, not only hold your positions, but buy, correct?
Absolutely. The fact is very few people are there now. So, the number of potential buyers in the next 5 years, just to pick a time frame, as opposed to the potential sellers, it's 10 to 1. This is so early on in the game. It's easy to get excited, and I think basically people are starting to figure out that the central banks have no answers, and they can talk about rates all they want, but they're just going to keep printing more and more money, making the currency worth less. And the big beneficiaries of that are gold and silver bullion, and the leverage is in the shares in that event.
John, let me ask you this. Where do you think that this bull market is headed from here? You were there for the bull market in the 70s. We had the 25-fold gains in gold. We had 38-fold in silver. And I know we've had some moves in gold. Of course, we were 250 low, and currently we're sitting around close to $1,300. But, you're talking about like a 5-fold gain. We just haven't seen that much yet, have we, compared to what's coming?
Oh, nothing. Basically, as a result of the correction we had in the last 4.5, 5 years in gold and silver, back at the end of the last century, 2000, gold was down around 270 and silver was languishing around $5. So you had tremendous moves. Silver had a 10-bagger, roughly, and gold went from 270 to 1900. Now you've had these manufactured corrections which had no basis in fundamentals. So the next move, I sort of reject, a lot of people, 10,000 to 50,000. Yeah, I can make those calculations, but that just frightens people off. I think the first thing we have to do is take out the all-time highs, 1,900 for gold and $50 for silver. Once we get through there, then we can get new targets. But I don't see any problem based on where I see this thing going of saying gold's going to maybe as much as $5,000 and silver's going to at least $100.
John, let's talk about silver for just a minute, because you brought up the high there from 1980, which was the high this time around, $50. And of course, when we go through there, especially with commodities, they double. And so I always said on the air, look, when you have gold go through 875, you're going to go to 1750 or more. And we hit 1920 on that first leg, right?
Yeah.
So as silver breaks 50, it's important for people to understand it's going to go to 100 and above.
I believe that.
And if it did a repeat of what gold did, you'd probably be talking $110, $120 on that leg.
Well, it's the old, as you get into real bull markets in precious metals, the gold-silver ratio drops precipitously. It always has, and it will this time, because there's less silver around, and it's poor man's gold, and this is sort of the mania spreads. People that can't afford to buy the very expensive gold will buy silver. And a significant proportion of the silver coming out of the ground is going into industrial uses. So there's a shortage of silver. And so that underwrites this drop in the gold-silver ratio, which traditionally has gotten down, as low as 15 to 1. It's currently 75 to 1.
John, people thought you and I are insane, though, because in 2002, 2003, with silver in the fours, we would talk about silver breaking through that $50 high, and people literally thought you and I were insane. And, of course, we hit $50 already, but now we're back in that $17, $18 range.
It's cheaper now than it was at $5, in my opinion, at the beginning of this century.
So we're sub $14 at the low. Here we are around $18, and people are listening to you and I and going, these two have lost their minds.
No, we haven't.
They're talking $110, $120 silver, but they don't understand, John, that's just how bull markets work.
I know. And this one is going to be a huge bull market because This is historic stuff that's going on in the currency space. I mean, we will have a new currency system before this is over. So, I mean, anybody that's talking, massive numbers for gold and silver, it may turn out to be true because the money that it's being valued in is going to be, debased dramatically.
In closing, John, what do you want to say to people around the world?
We're early in a bull market. I mean, I'm not going to say after the, powerful moves we've had in the last week or two that I pile in with every cent I had. But you've got to understand we are now in a bull market. And if you do not have a position, you must get one. And if you want to do dollar averaging or finesse your way in, I think it's important that you get a position.
John Embry, Chief Investment Strategist at Sprott Asset Management. Thank you for joining us on King World News.
Eric, it's always a pleasure.